Joining me now, Kevin Hincks, co-host of Fast Market Live at the CBOE, taking a look. 73,000. That was the jobs report in July, and the numbers for the prior months were also revised to the downside. Let's talk about this now. Kevin Hincks.
Good morning, Nicole. Yeah, a lot to go through here, so not a lot of it very good in terms of the non-farm payroll data. First, you mentioned 73,000 jobs, a miss on the expectations. The unemployment rate, 4.2%. Here's the reality, Nicole. It was very close to 4.3%. The actual number, 4.248. A couple more ticks, and it would have been 4.3%. Private payrolls, 83,000, less than expected. Manufacturing lost 13,000 jobs. The labor force participation rate downticks to 62.2%. With the unemployment rate going up, that's two metrics going in the wrong direction. Then wages, month over month, up 0.3, and year over year, 3.9%. That's higher than expected. But just as important, Nicole, are the things within the data, like the revisions, massive revisions to the last 2 months. May revised down 125,000 jobs from 144 to 19,000. June down 133,000 jobs from 147 to 14,000. Nicole, here's the other thing. Healthcare added 55,000 jobs. That's good. But the federal government lost 12,000 jobs, and since January, when the Trump administration came in, they're down 84,000 government jobs. Remember, the Biden administration in the last 12 months added an average 41,000 per month. Now, the good news from all this, interest rates. Interest rates are plummeting in terms of yields, and the probabilities of a September rate cut went from the 40s to almost 70% chance of a September rate cut. Look at yields, look at the U.S. dollar. That is telling you a rate cut is coming, Nicole, quicker than we may have thought.
Well, I guess this is, at least for some folks, what they wanted. Not a pretty picture, and those revisions are brutal. I mean, it's one thing to have a month off, but then it's another to have two prior months revised down in this way. And then is it the double whammy? I guess it would be a double whammy with the tariffs. There's no triple whammy, right? Unless sentiment's terrible. But I'll go with the double whammy right now. The tariffs roll in, and now people have to adjust to this on global trade today. Your thoughts?
Yeah, the tariff situation, here as it is, as best I can describe it at 8:30 Eastern time. New tariffs ranging from 10 to 41% on just over 60 countries, primarily those with trade deficits with the U.S. or deemed to have unfair trade practices. Now, negotiated deals, that's the good news. Japan, South Korea, EU. The baseline tariff of 10% to countries not specifically targeted. EU, 15%. Canada, 35% tariffs. Now, that's without the USMCA import exempt products, but Syria, Laos, Myanmar, 40 to 41%. Steel and aluminum from 25 and 10% to 50%, although the UK is at 25%. So as many as 60 countries now have tariffs ranging from 10 to 41%, Nicole. Pretty significant in terms of, we did get some deals done, just not as many as we didn't get done. And of course, Canada. Remember, Mexico stays for another 90 days as they continue to negotiate. President Trump saying that Mexico has been very fair and good negotiating. Canada, not so much, Nicole.
Understood. You know, when I think about this, the big picture, it's one day. It's one morning. We've had a market, the momentum has been to the upside. I mean, look at that IPO yesterday, Figma. I mean, it was like, you know, in a really great market environment. Can we shake this off, right?
Yeah, and remember, Amazon is down based on their earnings. So is it a little bit of earnings? Is it a little bit of non-farm payrolls? Is it a little bit of tariffs? The answer is yes to all those. It's just a little bit of all of it. So, yeah, the market is still, you know, at or near all-time highs. The S&P 500 is not going to open there. It's probably going to open below 6,300, but still, it's significantly doing fairly well this year. But today might get a little bumpy, Nicole, as we end this week of so much earnings and data. Might get a little bumpy here.
Yeah, and look, you can't deny what we have seen, and that was some great numbers. I mean, from the likes of Meta and Microsoft and new highs. And next week we'll continue to get more in. But for today, you are seeing the safe haven of gold, for example, up $50. I mean, people are running for some safety. I mean, the 10-year bond yield now at 4.27. That could be more of an indicator of a rate cut to come, right?
Exactly right. The odds of a Fed September rate cut are skyrocketing. Gold is more or less reacting to the big downward move in the U.S. dollar is helping gold up. But this is, the pressure today, unfortunately, is going to be on the Fed and Jerome Powell. Michelle Bowman and Christopher Waller both came out with justifications for why they voted or why they dissented, and their views right now seem much more in tune with what the actual market is showing. And remember, 4.248 unemployment. It was almost 4.3, Nicole.
Yeah, yesterday we were saying that Jay Powell was probably like, good job, but look at the PCE, I did a great job holding off. And now maybe he's saying, well, we do have a meeting in September 17th, folks. Put it on your calendar. They may be considering this now. Kevin Hincks, it's great to see you. I would not want to be on the Federal Open Market Committee. I mean, there's so much stuff that comes in. It could be good, bad, I don't know, at any point. But a busy week we have had. Kevin Hincks, thank you.